I'm going to go straight to the point because of time. In this video today, I'm talking to you about treasury bills. Treasury bills in Nigeria, how to make money with treasury bills in Nigeria. Treasury bills are also called TB for those in the financial market or those who are into treasury bills business. So treasury bills, bills that is meant for the treasury, like the national treasury, the treasury of Nigeria. Different countries have their own treasury bills that they use. So in this video, I want to show you how you can make money from treasury bills in Nigeria. Many have said forex is too risky, crypto is too risky and difficult. No problem. Even stock trading, they say, stock is somehow. But don't worry, treasury bills is not that difficult. For your information, in February 2026, Nigerian treasury bills rates showed a slight easing with 364-day bill rate dropping below 16%. So 364-day bill was 16%. That is what happened. Now, it dropped in February, just this last February 2026, it dropped to 15.9%. Then the 91-day bills was around 15.80%, while the 182-day bill were at 16.65%. So, and despite all this, it was oversubscribed. People subscribed in excess. So in this video, I will tell you everything you need to know about treasury bills as far as Nigeria is concerned. When you understand treasury bills concept in Nigeria, you can apply it to any other country that you are interested in applying the same principle. The same principle applies to treasury bills anywhere. So in treasury bills for Nigeria last month, it was 16%. And then for 365 days, then 6 months was about 15 point something percent. And then 91 days also was in that range. So those are the information that we have. I will tell you everything you need to know about treasury bills. Many people have come and said, this one, that one is difficult, is hard. Forex is hard, crypto is hard, or which one again? Stock trading is hard. Which one are we going to do now? The one you can do that you are sure, in fact, in treasury bills, you will have collected your interest. So at the end of the 91 days or 92 days or 364 days, what they are going to pay into your account is your capital. So you collect your interest the moment you start, the moment you invest in treasury bills, you collect your interest. So now, how to make money with treasury bills in Nigeria? Treasury bills are one of the safest and most accessible investment options in Nigeria. Very, very safe. You are sure that you are not going to lose anything. In forex, you can lose money, but in treasury bills, you cannot lose even a naira, even a dime. The moment they tell you that this is the amount they are selling the treasury bills to you, and you agree and you sign it, that settles it. At the end of the day, you are going to get whatever you have agreed on, and in fact, you collect your interest. If it's 15% interest on 1 million, that's going to be 150,000 naira. Yes. So you will have collected the interest even before you start, before you collect the interest. As soon as you deposit, they'll pay your interest. So only the capital will be paid back at the end of the period. Now, I'm going to take my time to explain what treasury bills are, and then after explaining, you can decide if you want to go into it or not. So I said earlier that treasury bills are one of the safest and most accessible investment options in Nigeria. If you are looking for any investment in Nigeria that there's no fail, there's no story, it is treasury bills. They are short-term debt instruments issued by the federal government of Nigeria through the Central Bank of Nigeria. So it's the federal government of Nigeria that issues treasury bills through the central bank. The federal government of Nigeria it's like they are borrowing money from you, but they will give you back with interest. In another way, government use treasury bills to get money to fund their project. In another way, government use treasury bills to remove money from circulation. So the money that's supposed to be moving in circulation, inflation will come if there's too much money in circulation. So they remove some of them from circulation. And that is through the process called treasury bills. So through that process, you give government your money while government give you interest. Whereas that money you give to government is removed from circulation. So inflation is reduced in the process. So they use the treasury bills to finance government needs while paying interest to investors. I said that already. If you are a beginner or seasoned investor looking for low risk returns, treasury bills are worth understanding. Maybe you're a beginner and you're looking for a low risk return, then be thinking about treasury bills. Many have said forex can give you money today and take all the money tomorrow. Crypto is down, going down. But treasury bills, anything they agree on, if you agree on 10%, it has been agreed. No matter what happened, that is what they will pay you. If you agree on 15%, no matter what happened, that's what they will pay you. These treasury bills, I know of people who get loan from somewhere at 4%, from their place of work at 4%, at 8%. Then put it in treasury bills, even though you don't need the money for anything. Collect the loan from your cooperative or anywhere, put it at 4%, at 8%, even at 10%. Then put it in treasury bills at 15%. So you have made 5% in the process. So it's wisdom. So it's just simple arithmetic. Now, what are treasury bills? Treasury bills are short-term government securities with maturities of 91 days. Treasury bills are short-term government security. It's not long-term. Long-term means more than 2 years, or even long-term means more than 5 years. But in treasury bills, it is short-term. It has 91 days, it has 182 days, it has 364 days. So it can be 91 days, it can be 182 days, it can be 364 days. They are zero coupon investments, meaning that they don't pay periodic interest. They don't pay periodic interest. Instead, you buy them at a discount and receive the full face value at maturity. That is treasury bills for you. For example, you buy at 100,000, if you buy a 100,000 treasury bills at 97,000 naira. The treasury bills is worth 100,000, but you buy it at 97,000 naira. At maturity, you get 100,000 naira. Your profit is 3,000. Now, that is what it means by zero coupon investment. Now, why do people invest in treasury bills? People invest in treasury bills because they are very low risk. They are very low risk. And another thing is that treasury bills are backed by the federal government of Nigeria. Apart from the fact that they are very low risk, they are backed by the federal government of Nigeria. Then they are short term. Treasury bills are short terms and they are also flexible. Then treasury bills are a good place to park idle cash. If you have idle cash, put it in treasury bills. Anytime you need the money, you can go back and take it. They'll calculate the number of days that it has stayed and pay you interest on those days. Treasury bills are easily tradable after purchase. Once you purchase it, you can easily trade it. Every time people want to buy it. So it's not that you buy it and then nobody want to take it from you. At every given time, there are people that are willing to buy the treasury bills from you if you buy it, and then you still make profit. Now, let's break down how you can actually make money with treasury bills. How can you make money with treasury bills? Let's break it down now for you. You can make money in different ways. But before we go on, how to buy treasury bills in Nigeria is very, very important. Many people don't understand how to buy treasury bills. So talking about treasury bills, you buy it from the federal government. They are thinking, federal government, will I go to CBN? No, you don't need to go to CBN. All you need to do is to go to your bank. Tell your bank that you want to buy treasury bills. They will direct you to the desk where they are going to sell treasury bills to you. At any given time, you can buy treasury bills and still make profit. At any given time. Usually, it has a time of every month, there's a time for you to buy treasury bills. But at the same time, some people buy and then they need cash, so they resell at every given time. Now, there are two main ways to invest in treasury bills. Number one is called the primary market. This is also primary market as used also in forex, in stock trading. In primary market, you have to go to the floor of the trading house. When they are bringing a bid out, you go to the primary market, you also bid. So this because of primary market, this is how you buy at issuance before the bills enter the market. So the primary market, you buy it at the issuance. That's the issue. The same time the government is issuing it, you buy it in bulk. You cannot buy, retailers cannot buy from the primary market. It is wholesalers, people that have big money that can buy from the primary market. So now let's look at the step-by-step process of buying from the primary market. Then later on, we'll come to the secondary market. But note that this primary market is for the big players. So you may not fall in the big players, I may not fall in the big players, but we fall in the small or medium-sized players where we can buy from our banks or from our brokers. brokers and banks have bought it at a ridiculous. It's like wholesalers, like people going to the farm to buy things, or they bring tomato from Kano, from Kaduna, from the north to the south. There are some people in some market, like in Lagos, we have mile 12. You have Okeodo, they buy it in bulk. That's where the trailers go to. Then later on, people now go to that mile 12 and then buy from the mile 12 in still at cheap price. So that is the primary market is like the mile 12. They are the ones that buy the trailer load from the people that brought it. So that is what happens in the primary market. Now, what is the step-by-step process in the primary market? You open an account with a commercial bank or pension fund administrator approved to deal with government securities. Then number two, you complete the treasury bills application form. That is, if you want to buy treasury bill, complete the treasury bill application form with your chosen bank or pension fund administrator. If you're a government worker, you know what I mean by pension fund administrator. They're the one keeping your pension money. So you can also go to them. They can help you to buy treasury bills. After you do that, then indicate the tenure. The tenure is how many years do you want to stay? Do you want your money to stay in the treasury bills? There are there are three types of periods you can choose. You can use 91 days, you can use 182 days, you can use 364 days in treasury bills. Then when you choose the tenure, you also choose the amount you want to buy. You can choose 50,000, you can choose 20,000, you can choose 100,000, you can choose 200,000, you can choose 1 million. It depends on what you want to buy. And then they'll give you a percentage. Then you submit the form before the auction date. This one is the primary market. So they submit the form before the auction date, published by the Debt Management Office. So in the Central Bank of Nigeria, they say Debt Management Office. You know, this is like a debt. Government is taking the money from the people. So government is owing. So Debt Management Office take care of this one. Then your bank or PFA bids on your behalf at the CBN DMO auction. Then if your bid is successful, the treasury bills are issued to you. On maturity, you receive the face value. So you may buy treasury bills at 90,000 naira. At maturity, you can sell it at 120,000 naira, depending on the interest rate. The interest rate is determined at the auction based on market condition. So nobody knows the exact interest rate for the coming one. Because when they get to the auction, the people bring more money. If people bring a lot of money, then the price will go down because people will be bidding, the government will reduce the price. But if the money the people brought to buy the treasury bills are not much, then the price will go up. It's a simple law of demand and supply. If the demand is much, then the price will go up. If the demand is low, then the price will also move in its own direction. Now, let's look at the secondary market. This is where you and I come in the secondary market. In the secondary markets, this is after the issuance. After they have issued it, I've given you an example. The primary market is like trailer load of yam coming from somewhere, and then from the north, and then they go to about 12 in Lagos, and then Okeodo, Lagos, then they drop all the trailer load of yam. Then people buy it. The marketers have their structure, they buy it from them. Then the trailer go away. Then now, other people that are selling in different markets, they now go to mile 12 and go and buy. So that mile 12 market is like the primary market where those people offload the load. So the primary market in this case is the big players. Now, the one that concerns us, even in treasury bills, is the secondary market. So this is after the issuance. If you miss the auction or want to buy or sell existing treasury bills before maturity, this is the process. You go to a broker or a dealer or your bank or investment firm that trade treasury bills. If you have one bank, you go to them, they say they don't trade treasury bills, go to another bank or ask them to tell you the banks that trade treasury bills. But most commercial banks in Nigeria, they are going to trade treasury bills. They handle this. They have a desk officer that does that. So place an order to buy or sell at the current market price. At the secondary market, you look at the current market price. There used to be a current market price. As at this moment, there's a particular price that the treasury bills is selling. So it is at that price you're going to place it. And then they are going to buy for you at that price or sell for you at that price. Now, settlement is usually done within 1 to 2 business days. Many retail investors prefer this route for flexibility. I also prefer this secondary market route. I don't like that primary market route for flexibility. How you earn from treasury bills. There are three main ways by which you can make money from treasury bills. Number one is discount yield. That is the primary way, as I've explained earlier. I've explained that one earlier. So you buy at a discount, receive full face value at maturity, then the profit is the difference. If you buy treasury bills at 97,000 naira, if you sell it at 110,000 naira, the difference is 13,000 naira. So if you do that in percentage, then you can arrive at the percentage and pocket your 13,000 naira. But it can be 91 days, 182 days, or 364 days. So you have to wait for that period. Sometimes you can collect the interest immediately and spend it while you wait for the capital by the time it matures. Example of this one I'm talking about is when you invest 1 million naira, the B discount rate is 7% per annum, which this is just an example which I put in this book. But the real value that happened in Nigeria in the month of February is 15.9%. That is the amount they traded treasury, 15.9%. That is the amount they traded it. So the tenure can be 182 days. Then the profit you're going to make, you can calculate it when you place the percentage on the money you put there. This rate changes with each auction. Another way you can make money with treasury bills is selling before maturity. You can make money in treasury bills by selling treasury bills before the time it matures. If interest rates fall after you buy the treasury bills, its market prices go up. You can sell at a profit. But if rates rise, price will fall, selling may incur a loss. This is why the secondary market is best for traders, not investors. So the secondary market is best for traders. It's not best for investors. So as you buy at the auction and then you buy at the secondary market, the price of treasury bills can go up. It can come down. If it comes down, if you sell, you're going to make a loss. But if the price of the treasury bills after you are holding it goes up, if you sell at that point, you are going to make a profit. Now, the third way you can make money from treasury bills is holding multiple batches. You can ladder treasury bills. You can hold 91 days maturity. You can hold 182 days maturity. You can hold 364 days maturity, so that maturities are staggered. So that you can, by the time it is 91 days, you collect that capital. By the time it is 184 days, you can collect your money. 182 days. By the time it is 364 days, you can collect, so that you can have something to spend at any given time. This gives regular liquidity while still earning returns. Now, what determines your returns in treasury bills? Let's look at what are the determinants of returns in treasury bills. Your profit depends on interest rate at auction. The interest rate at auction is number one thing that will determine your profit. Then the time to maturity. The time to maturity also will determine your return, your profit. If it is 91 days, the interest is usually less. If it is the lowest, while 182 days is the medium, while the longer the time, 364 days, the interest is higher. Apart from this, another thing that determines your return or your profit on treasury bills is the amount you invested. How much did you invest? So the amount you invested will determine the amount of profits that you can make out. Then another thing that will determine your interest in treasury bills is the market demand for treasury bills. How is the market demand for treasury bills? So that is another factor that will determine how much you are going to earn on the treasury bill. Now, let me just look at one or two comments that I've seen some people dropped here. Yeah, I can see Banastey Paki. He says hello. Hello, Banastey Paki. He's also saying what's up. Banastey Paki, I guess you are dropping this message from this chat from Asia. Thank you very much. And I guess it's India. I want to thank you for your message. And if you have any question or any comment for me, the chat section is there. Please drop your comment and your question. So I'm talking about what determines your return in treasury bills. I've mentioned the interest rate at auction, the time to maturity, then how much you put in, and then the market demand for treasury bills. These are the factors that will determine how much you're going to make from treasury bills. Apart from these, Nigerian treasury bills rates change weekly based on inflation, liquidity, and monetary policy. So inflation affects Nigerian rate. Apart from inflation, liquidity also affects it, and then monetary policy also affect it. Now, what then are the advantages of investing in treasury bills? You may be wondering, you are talking about treasury bills, sir. What are the advantages of investing in treasury bills? Number one advantage is that it has very low risk. Treasury bills investment are very low risk. This is because it is backed by the federal government. Apart from that, there's predictable returns. You know how much you'll earn at maturity. It's backed by the federal government means that you are sure that nothing will happen to your money. Your money is safe, your money is sound, because the government is still functioning, the government is still in power, the government is still there. The government, even if one government left, another government is going to take it up. So it's not something that is government. It's about CBN, and CBN is constant. DMO is constant. So the federal government too is there. So you have predictable returns. Then you also have short maturities. That's another advantage of treasury bills. The maturity rate is short, and it's not. It depends on you if you want it to be up to 1 year. But if you don't want, you want 3 months. So you don't lock money for too long in treasury bills. Apart from this, there's high liquidity. Treasury bills can be sold on the secondary market at any time. You can go ahead and sell your treasury bills at the secondary market, and you are good to go with that. So these are some of the ways by which you can benefit and make money from the treasury bills. Now let's move to the next thing, which is still on the benefit. Another benefit of treasury bills is that it is accessible to retail investors. So retail investors can take part in the treasury bills market. It's not only available to the big investors, small investors. If you have 10,000, if you have 20,000, if you have 30,000, you can go, they will sell units to you, and then you are going to also make a profit based on that unit. That's why I said how much you are going to earn from the treasury bills to determine how much you put in it. So if it's 15% per annum and then you put 100,000 there, that means you make 15,000 naira. If it's 15% per annum, you put 1 million naira there, that means you put 150,000 naira. So that is how it goes. Then treasury bills have long-term safety. Treasury bills are safer than stocks and corporate bonds because the government guarantees them. Government guarantees treasury bills. There's no story about it. Whatever happens, the government will pay you your money. You don't need financial expertise to understand treasury bills. All you need to do is know the percentage, go buy it, and go to sleep. Then your money is going to be the interest that you have agreed on will pay to you when it is time. Now, I've looked at the advantages of treasury bills. Does it mean that treasury bills have disadvantages? It has 1 or 2 disadvantages. No investment is perfect. Here are the disadvantages and risks of treasury bills. Number 1, lower returns compared to stocks. Treasury bills have lower returns compared to stocks. You trade off higher risk for safety, and that means the returns are usually lower than equities. So the returns are lower. Then another disadvantage of treasury bill is reinvestment risk. If interest rate drops dramatically, you may earn less when you roll over at maturity. Then opportunity cost. If the market is booming like stocks or commodities, treasury bills might underperform. That's opportunity cost. Then apart from this opportunity cost, another disadvantage of treasury bills is market risk in secondary trading. While primary treasury bills are safe, selling them before maturity exposes you to price fluctuation. But don't worry, you can always be sure of the price. Just check and then you see the price. Then inflation risk. If inflation is higher than the return rate, your real return may be negative. If you need advice on how when to buy treasury bills or what you have a social amount you want to buy treasury bills, you can drop comment in the comment section of this video anytime you are ready, and I'm going to be there to respond to you and to give you up-to-date, updated information on how to go about it. Now, who are the people that should invest in treasury bills? Who and who? Number 1, those who are risk-averse investors. If you don't like taking risk, then go ahead and invest in treasury bills. Who else are to invest in treasury bills? People saving for short-term goals. If you have a goal of 6 months, 1 year, or maybe they put money in your hand, they say they will collect it in 6 months' time, go and put it in treasury bills. If you go and put it in forex, if you lose money in forex, the money is gone. But in treasury bills, as they have agreed that they'll give you the money in 6 months, they are going to give you, and you too want to pay somebody in 6 months, put the money in treasury bills, and then after that money comes, then you pay the person what you want to pay the person. Then retirees needing stability also can invest in treasury bills. Then beginners who want safe returns can also invest in treasury bills. Then investors waiting for better opportunities. So you are waiting for better opportunities. Invest in treasury bills. The money will be increasing at 15% per annum, 14% per annum, pending when the main thing you are looking for comes. Now, treasury bills are perfect if security and predictability matter more than high profit potential. The higher the profit you seek, the higher the risk that is involved. If you risk higher profit in Forex, also know that there's higher risk in Forex because anything can happen. As much as you can double your account in one day in Forex, you can also lose your account in one day in Forex. As much as you can double your money in one day in crypto, you can also lose your money in one day in crypto. But in treasury bills, nothing like that. It is something that is fixed. Once they say 15%, 15% is 15%. You cannot lose. You cannot lose any dime. All you need to do is to wait for that time, 91 days, that's 3 months or 6 months or 1 year, and then get to 15% and get out of the market or you reinvest. Now, here are some practical tips before you invest. Number one, always check the option calendar of the Debt Management Office of the Central Bank. Number two, choose the tenure based on your cash needs. If you need cash in 3 months, then choose 3 months tenure. If you need the cash in 6 months, then choose 6 months tenure. If you need the cash in 1 year, then use the 1 year tenure so that the money will be kept there. Then don't lock all money in one maturity. So don't lock all your money in one maturity because you may need money in 6 months. So if you have locked it for 1 year and you need money in 6 months, you'll be forced to sell that even when the market is not favorable. So you don't lock. You can put, if you have a lot and you want to put in 3 months, put for 6 months, and then put for 1 year. Then use reputable banks or brokers. There are many reputable banks or brokers around. If you ask me in the comment section, I'm going to give you the name of a reputable bank where you can go and there's no story with them. Now, apart from this, yeah, thank you very much. I can see your response that I'm absolutely correct. I appreciate you. Thank you for coming on my live stream today. This is Jamie Marcus. Jamie Marcus, W7XT. Thank you very much. He said I'm correct. Yes, I know what I'm saying is very, very correct. So another thing you need to do is to keep an eye on inflation. Keep an eye on inflation and policy rates. When government change policy, it will affect treasury bills. So that can help you to know whether you should sell immediately or buy. When a particular government came into power and say subsidy is gone forever, do you know what? I was into poultry and I used to buy layers feed. And then he said subsidy is gone forever. Then I saw that the price of fuel, even though they have not changed the price of fuel, people started queuing for fuel. Fuel that was saying as 195 went up to 300 and something. The moment he said subsidy is gone, so immediately I went to the way I'm buying flour for my poultry. I bought a lot of bags. In fact, it was in the night because I knew if I waited the following day, they will increase the money. So this is the same thing with investment. You keep an eye on inflation and policy rates. So when you hear any policy news, policy decision, you look at how it's going to affect your treasury bills investment. Now, I'm going to end now by saying that treasury bills are one of the safest ways to make money in Nigeria today. Very safe, but the return is fixed 15%, 14%, 16% sometimes. Compare with some others where you can make 100% at the same time, but those others too, you can also lose 100% in the same time. So treasury bills are one of the safest ways to make money in Nigeria. Safest way how? In that if they say that it's 15%, it is 15%, no story. You can't get 16, you can't get 14, you can't get 20. It is that same 15%. But in Forex can give you 50% now and take 100% from you. Can give you 50, you can take 100% from you now and give 50%. So that one fluctuates. It depends on so many factors. But this one fixed, and therefore it is perfect for beginners and cautious investors. If you're a beginner investor, you're a cautious investor, then you should go for treasury bills. You earn by buying at a discount and redeeming at full value. You can also buy or sell in the market before maturity. Returns are stable but generally lower than stocks. Whether you are saving for business, saving for education, or saving for investment, Treasury bills are a solid option to grow your money with minimal risk. So this is where I'm going to stop now. I just want to give you a recap of what I said at the beginning, where I said talk about the percentage that we have in February 2026. In February 2026, Nigerian Treasury bills rates showed a slight easing, with the 364-day bill rate dropping below 16%, approximately 15.9% to 16.98%. The 91-day bills was around 15.80% to 15.84%, while 182-day bill were at 16.65%. Despite the slight decrease, the market experienced high demand with over 4 trillion in subscription on February 4, 2026. I believe you have gained value from this video. If you have gained value, let me know in the comment section. Just say I gained value. And I'm going to see you in the next video, in my next live stream. For all those who have watched this live stream, I want to thank you. I want to appreciate you. I want you to start investing. Don't dull yourself. Don't let anything to hinder you, to block you. For all those who commented, like the Bamit's Paki, and then Jenny Marcus, I want to thank you very much for coming around my live stream today. I'm going to see you in the next live stream that I'm going to bring up on different other areas of investment again. I'll see you in the next one. Bye for now.